Alright, so let's continue with the weak gap. Alright, now where can you find the weak gap? Alright, what is a weak gap? A weak gap, I would say, it can be a 3-candle formation, it can be a 4-candle formation. I'll explain why. Alright, if we are taking a pool of liquidity, alright, now okay, let me explain it this way. I think this is a much more better way to explain it. Alright, I would say I'm looking for a scenario I can use where it will be a 3-candle formation. Alright, now if you look at this swing high here, alright, we traded into this rejection block here. Let me identify that on the chart. We basically need a strong identification that price is already moving bearish. Alright, we traded into that rejection block there. Oh my days, I'm so sorry. When we traded into that rejection block there, we just have 3 candles forming the swing high. But guess what we did? We broke market structure. Alright, we had a shift in market structure, rather not a break of market structure, a shift. And when we had that shift in market structure, it left behind a fair value gap. So in this case, I can say, just looking back, very easily, this candle here, the wick, you can clearly see the candle in the middle, in the swing. So meaning candle 2 of the swing high. We have candle 1, candle 2, which formed on the 30th of April, candle 3, which formed on the 1st of May. Alright, candle 2 in the middle is where you will find your weak gap. You take your quarter levels, alright, you can use from 25%, 50%, up to 75%. Alright, price can trade there and give you a nice setup. Alright, let's look for something else. I'm looking for another scenario where you can use a weak gap. It's every swing high. You understand? We have the swing high here, but if there's no strong indication of bearishness, right, like a market structure shift or giving us a confirmation, in this case the confirmation would have been the CISD. So I cannot say within this swing, this high here, at the moment we went below these other blocks open here, is officially a weak gap. You understand? I just want to see confirmation that we are actually bearish, but we didn't use it. You understand? So basically that. In this case, I would have needed 4 candles. We took the pool of liquidity, alright, but that doesn't mean anything on its own. Alright, I would have needed 4 candles. Why? Because we have 1, 2, 3, 4. Until that 4th candle, we have not done anything of significance to show that we have started the move to continue going higher. You understand? So at the 4th candle, it confirms that the swing is valid. Alright, and then this candle in the middle of the swing low, alright, that's what we identify as weak gap. Now, another thing you need to note about weak gaps is this. If we have a swing, for instance, remember I drew a gap at the beginning of this video from the left. I don't need to draw it again. Alright, we have a swing high here between 23rd of June, 24th of June, and 25th of June. There's a swing high that formed there. Alright, there is no weak gap in this case. Why is there no weak gap? Because the candle on the 25th of June has already used everything in that middle candle, so we won't be regarding any weak gap there. But we can find our rejection block and every other thing we need to find there. Alright, I hope that makes sense. So that is that. Now there's one PD array that most people don't talk about a lot. Alright, this is called a redelivered rebalance. Let me write that down so that you can do your studies on it. A redelivered rebalance. Redelivered rebalance. Oh my. Let's go back to the daily time frame. Boom. All right. Redelivered. You see an error there. I think there was an issue with I want to ensure you see the levels so that you know what to name them when you are trying to journal them. That's very, very important. So redelivered rebalance. Perfect. So a redelivered rebalance. Now let me show you what that looks like. I saw it on the 1 hour chart this week. Okay. So I will be showing you that in a little bit. Alright, it's right here. Now we had a market structure shift. Alright. We took this low, we took this high. That's the market structure shift. Alright. And there's a breaker formation here. Alright, so it's a market structure shift, but there's no fair value gap on the 1 hour time frame. So what do? Does it mean we just throw away that whole area? No. Now let me show you what we do. Okay, you can clearly see we had this week that broke above, retraced back, and all of that. You look at the next candles, the next 2 candles after that. What did they do? The next candle, which formed by 11 a.m. on the 7th of July, look at what happened. You take note of this. It closed above the 50% of that week with a candle body. That alone is all we need to see. Alright, or almost all we need to see. Because the next candle, if the next candle, alright, does not close up, the next candle that formed by 12 p.m. does not close up the space between its low and the high of the candle that formed by 9 a.m. then we have a redelivered rebalance. Let me show you that. Alright, so let's quickly draw that out. I will ensure the gap does not extend so that I can give a proper explanation to this. Let's go to settings. Do not extend. Alright, so as you can you see that that's how we now draw the fair value gap when we have such a scenario. Right, you can look for more examples on your chart. But can you see how the bodies of the candle are respecting that level? Now take note. Look at this. Let's draw it out again. Can you see how when price traded to it again, price respected that level and went on to take out this high? Now that's the redelivered rebalance. Alright, so that's something new that you probably have not heard of. Okay, now let's move on to the next level. The next level I would like to show you. Okay, let's go to the daily chart so I can decide which one. There are quite a lot, but it's not really a lot per se. Right? Now the next level I would like to show you is an inversion fair value gap. Alright? An inversion fair value gap, popularly called the IFVG. Right? Just an inversion fair value gap. Now what is an inversion fair value gap? Okay? Just as the name implies, if we have been bullish or if we are bullish and we close above a bearish fair value gap, alright, we are going to be using it for bullishness. If we are bearish and we close below a bullish fair value gap, we are going to be using it for bearishness. Very simple. Simple logic. Alright, now what does that look like on the chart? Let me show you quickly. What does that look like on the chart? Alright, let me show you an amazing example. Okay, remember I told you about drawing the fair value gap, we include the volume imbalance as long as the criteria we mentioned then is met, okay, and not exceeded. Right? Can you see this? Draw it out in time. Now take a look at this. We are bullish in this case, alright? Though I will explain how to get your daily bias and all, but not in this video. I don't want the video to be too long. Alright, so we close above the high of that fair value gap. Okay, and then look at what happened on the 12th of January 2026. We go back into that place and we find bullishness. Beautiful. We go back into that area and we're able to find bullishness. So we use that area for bullishness. Now, just the same way. Alright, let me draw this fair value gap here. Alright, it's a suspension block, but it is also still a fair value gap. Take note, it doesn't throw away the fact that it's a fair value gap. And remember, suspension blocks are treated like what? Fair value gap. So keep that in mind. So you can clearly see this suspension block, fair value gap, whatever, alright, drawn to the left when we're now bearish. How do we know we're bearish? Because we closed below that area. We closed below it with the candle body. And you can see price respecting that level. Even as far as respecting the 50%, we didn't close above the 50% of that gap. And we sold off. So beautiful stuff. Real beautiful stuff. Now, I think the only level left for us to talk about is balanced price ranges. Alright, is there any other levels you want me to speak on that I probably have not mentioned in this video because of time and I don't want to make it too long? Let me know in the comment section. I will make a very, very simplified video on it, help you understand the concept. Alright, so let's talk about balanced price ranges. Now, what are balanced price ranges? Alright, now remember I told you when we were talking about fair value gaps, I told you that a bullish fair value gap is called a BC. Alright, I probably did not mention that a bearish fair value gap is called a CB. Now, what is a BC? A BC for a bullish fair value gap is buying imbalance, selling inefficiency. So I told you only buying happened in that area. Alright, and this was the fair value gap we used. This one right here. So only buying happened in that area. So it's inefficient in what? Sell side delivery. Okay, so the moment price comes and trades all the way to this high on the 16th of June, it has offered equal amount of sell side as the amount of buy side that was offered within that range. Okay, so the moment price trades to that and then leaves it, it becomes a balanced price range. Let me show you an example. I want to find an example where we actually used the range later on. Okay. Give me a few moments, I would definitely find something. Alright, perfect. Now, take a look at this level here. Now this for bullishness. I will show you an example for bearishness. Take a look at this level here. That fair value gap. Remember, it is BC. Buying imbalance, selling inefficiency, right? So the moment we traded to this low end of the gap, okay, on the 19th of March, alright, now we're waiting for price to do one thing, to leave it. How do we know we've left it? The moment price closes the candle body above the fair value gap, then we know we've left it. Alright, so the moment we do that and we leave it, you can clearly see that price found support at it again on the 1st of April 2026 and on the 2nd of April 2026. Beautiful. And one beautiful thing about balanced price range is that it can be used for bullishness and bearishness. You understand? So if price comes and closes below this gap again with a candle body close below, we can use it for bearishness. So keep that in mind. Keep that in mind. Alright? Now let's look for a bearish example where price actually used the level. Let's look for a bearish example. And remember, it's two candles, one that reprices to, one that trades away from it, that makes it a balanced price range. It's a two candle formation. I'm currently looking for an example that I can easily use to explain. It should be something I should be able to find easily, but because it's one pair we're looking at, okay, but we'll definitely find it. Okay, yes, perfect. I think we found something. Okay, now don't mind the fact that we close above the gap, but let me show you something here. Can you see this fair value gap here? Now this is a selling imbalance, buying inefficiency, so it's inefficient in buy side. Only selling took place there. Alright, so now we traded to the high of that gap. Even if we closed above it, doesn't matter. Alright, then the moment we traded below, it becomes a balanced price point. Alright, and you can see how price kept on utilizing it for bearishness, even up to 23rd of June, and see how we sold off massively from there. Alright, so keep that in mind. That's a balanced price range. So I've shown you for bullishness, I've shown you for bearishness. Okay. Now there are other types of balanced price ranges. It's not just fair value gaps alone. Okay, that can be a balanced price range. Let me give you an instance. Okay, we have an example here. Buy side is offered, meaning we had price started off with buying here all the way to 25th of September 2025. Then price sold, that's buy side offered, sell side offered, then price bought again. Now can you see that price overlaps this area with a fair value gap? Okay, we're using the week in this case because you can see this candle body on the 6th of October 2025 went above the 50%. You can go and check it by yourself. On the 7th of October 2025, it went above the 50% of that candle on the 7th of October. So what do? Just simply draw out your fair value gap. Okay, extend that in time. You can clearly see that high is a balanced price range. That's why price moved from there. So it's officially a balanced price range. But to make it easy, I've not really had to use that particular level. Okay, I've never really had to use it. Alright, so let me quickly show you another example. Okay. Let's see if I can find another example. Okay, let's see. This is an example here. You see these candles here? Price closed above their 50% with the candle body. Alright? Now that's officially a balanced price range. Anytime price will return back to that area, it will use it for bullishness. But let me show you, I'm looking for a cleaner one. I'm looking for a cleaner one. And I've not really seen it yet. But let's see. Okay, the way it looks is this. Let me just use a rough way of explaining it since I can't really find. Okay, I haven't found one yet. I think I can find it on the weekly chart because I encountered something like that on the weekly time frame. Okay, perfect. Now I want to show you this. Look at this candle on the that formed in the week of Monday, 22nd of September, 2025. All right. Look at the candle that formed on the 6th Monday, 6th of October that week, 2025. Now we closed above the 50% of this candle's week. Let me show you. All right. We closed above that candle's 50%. And in the balance pricing, we can use the 25% level of this. We can use the 50% level, which is the red line, 75% level, which is the next black line. Now, at the moment, we have price having used the 50%, okay, on this week, 13th of October, 2025. Alright, the next time price should come down to that level again. Just know that that area is now a balanced price range. Alright, the next time price comes there, it should find support and not close below the 50%. And if we close below the 50%, we can always reuse it. We can always reuse that level, alright, for bearishness. Okay, so I think these are all the levels that are of utmost importance to understand in interpreting price action. Yeah, so that's it. That's it. There's nothing really more to speak on the subject, but just to do your own personal study. Like I said I was going to check through multiple markets. So let's have a look at other markets. Let's have a look at other markets. I want to look at markets that maybe ICT doesn't really touch. Alright, for instance, the crude oil market. I think this will be the only example I'll show you because I don't want this video to be too long. It's already about 40 minutes deep. So, can you see volume imbalance here? Let me show you the precision. Can you see how price traded to that area and sold beautifully? Now I told you about liquidity pools, right? Can you see the way price traded to this liquidity pool of liquidity here and sold off? That's amazing. But note, it didn't just trade to the pool of liquidity. It traded to what? Rejection block. Let me draw that out so that you can clearly see it. So as you can see, this works on every market. It's not a form fitting or just cherry picking, right? It works on every market, every single last one. Remember, I taught you about breakers, right? Okay, let's say we don't even want to use the breaker at this point. Let me see if I can find a balanced price range for you. You can see the other block here being utilized. Boom. On this week, 23rd of January to 23rd of February 2026, we moved from there. But there's a lot, really a lot to look at here. A lot to look at. Take note of this. Now look at this week here. We traded above it here. We traded, okay, we've not used the 50%, so we're not going to focus on that. Let me see if there's any other level I can quickly show you. I think that will be it for this video. But you can also see this volume imbalance here. Resisting price. But that's that. Okay, you might want to see it on gold as well. Let me show you gold. Does it work on gold? Perfectly. Can you see this fair value gap here? Let me draw it out. We use the fair value gap there. Sold off. Can you see this other block here? traded to 50% without that block there, sold off. Can you see this area here? Let me show you the balance price range I just told you about. Can you see that? We utilize 50% there once, then we utilize it again. Okay, let me see another level. Let's look for a balanced price range this time. A balanced price range. Yeah, perfect. Let me quickly show you this. Can you see this fair value gap here? Can you see that? We repriced to it, we closed above it, we utilized it again on this 17th, the week of Monday 17th November 2025. So I think I will leave you to that with all of this. Okay. Can you see this mitigation block here? Let me draw that down now for you. Or maybe let's look at Bitcoin before we leave, before we end the video. Boom, 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 boom. Alright, as we're looking at it, can you see the fair value gap? So these levels work everywhere. And it's not just the fair value gap. Okay. We have the mitigation block. Now, this way I'll teach you something complex about mitigation blocks. We are going to utilize the lowest, our last mitigation block here. Okay, within this swing, this is the lowest candle body here, so we can actually draw this one as our last. But if we are going to draw them all together, we can draw all of them together. But I would love to refine it so that you see where price actually traded to. Can you see that mitigation block there? Boom. That's where we hit and sold off. Alright, beautifully. Can you see this area here? The fair value gap. Bada bing, bada boom. We sold off from there. Amazing. Full of liquidity. We swept it. Boom. Moved up. So that's amazing right there. That right there is amazing. So yeah, that's that. Have a good one, and if you enjoyed this video, kindly leave a like, subscribe, and drop a comment down in the comment section. If you are interested and you would love to be mentored by me, okay, you would love to trade live with me, you would love to join my mentorship, okay, you would love to learn from me personally, the link will be in the description below. Okay, my mentorship comes with 2 free prop firm accounts for you, a free month of FX replay, alright, for you to backtest and actually see if this strategy works. Okay, and other than that, it comes with a free Notion trading journal, alright, for you to journal your trades, and that'll be all. Alright guys, peace and love.